should the government force you to take larger required minimum distributions if you have larger retirement accounts? Well, if you're concerned about this question, that is what we're going to be discussing in our financial freedom video today, so stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. So Carson, today you're going to be covering a controversial topic that's been making headlines in financial circles, and that's the new proposal by President Biden to force larger required minimum distributions from massive retirement accounts.
Yeah, that's true, Andrea, because this is going to be a very unique proposal, and it's going to for sure stir up a heated debate between the haves and the have-nots. And so we're going to be talking about this unique proposal today in our financial freedom video. But before we do that, there are 2 rules to retirement income that we like to give you. And Andrea, what are those 2 rules?
Well, rule number 1 is to never run out of money. And rule number 2 is to never forget rule number 1.
Okay, so let's go ahead and jump into our lesson today. And let's talk about what is this mega required minimum distribution rule and will it affect you?
So Carson, what is the difference between a normal required minimum distribution as opposed to the mega required minimum distribution?
Yeah, that's a really good question. First, let me explain what a normal required minimum distribution is. If you have any retirement account, an IRA, old 401ks, old 403bs, 457bs, at a particular age, usually age 73 or age 75, depending on when you were born, you're required to take a certain minimum amount of your distribution out of those accounts. Now, this new proposal, Andrea, actually takes it up a notch, stating that if you have larger retirement savings, you're required to take more required minimum distributions than expected out of those accounts, which are known as mega required minimum distributions. So I do want to go ahead and talk about that particular part of the proposal in more detail. So let's go ahead and break down this new mega required minimum distribution rule that's been introduced by the Biden administration for the 2025 budget proposal. First of all, this new mega required minimum distribution rule would apply only to taxpayers who are earning at least $400,000 or a married couple earning more than $450,000 per year. It would also require that taxpayers with at least $10 million in their retirement accounts would draw half the difference between the actual account balance and the $10 million each year. Now, I know all of that sounds very confusing, but as we all know by now, any rules that the government is propositioning for us is typically always confusing. So let me go ahead and show you an example of what I just said. So if a taxpayer, let's just say, had a $12 million retirement account balance in 2025, they would be required to take $1 million from that particular account. That's half the difference between the $10 million limit, which is $2 million. Now, if that was not confusing enough, there's also an element in this proposal for people who have an account balance of $20 million or more. For anyone who has an account balance of $20 million or more, they are going to be required to take a distribution that is going to bring that account balance down to $20 million or less. So just imagine someone who has an account balance of, let's just say, $28 million. They would be required to take an $8 million distribution out of that account to bring that account balance down to $20 million.
Carson, those numbers really do seem to be aiming the tax gun at the 1%ers. So why should the 99% of us really care about it?
You know what, Andrew? That's a very good question that you asked there because, yeah, it does seem like these numbers are going to be aiming only at the 1%. But what can I tell you about that? Typically, what goes on at the top will filter down to those of us here at the bottom. So if the 1%ers are affected, it could affect those of us who are under them as well. And here's what I mean by that. But advocates of this bill just don't feel that way. Those who are in favor of passing this particular proposal say that it is a necessary measure to really address the income inequality in this country and also ensure that the wealthy people in this country are contributing their fair share to society, considering the tax advantages that they've enjoyed while accumulating these substantial retirement savings. So, their argument really is that these dollars should be put to work in our economy as opposed to being allowed to be hoarded away in these tax advantage retirement accounts. On the other hand, the opposing point of view of this new proposal of having these mega required minimum distributions imposed on the wealthiest in America believe that this could discourage savings in retirement, which could potentially lead to some adverse effects in our economy, such as maybe decreased investments in long term assets, which could inevitably lead to some increase in volatility in the stock market. They also argue that individuals who save for retirement are saving for the ideal that they're going to have financial security and predictability along the way. And of course, imposing a mega required minimum distribution could disrupt those plans.
All right, Carson. So, what's the moral of this video?
Well, the moral of this video is that the government is always looking for ways to try to even the playing field and make sure that there is income equality in this country, and that is a noble gesture. But they should also make sure that they map out what the full unintended consequences may be when they're trying to implement any new proposal. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
We have answers.